shift to one of the most decisive pillars of the agri-food network, that is finance. Across FPOs, processors, and rural enterprises, access to credit remains a consistent barrier to scale. On the other hand, lenders face very limited data, weak credit trails, and fragmented visibility, which makes decision-making far more complex than it is. This session, Redefining Credit, Building Financial Trust Through Data Intelligence, brings together leaders who shape how capital flows into this sector. Please join me in welcoming our distinguished panelist and moderator with a huge round of applause, inviting Sanjiv Bhatia, President and Head MNC, New Economy and Financial Sponsors Group, Axis Bank. Sanjiv is one of India's most respected corporate banking leaders with over 20 years in global and Indian banking. Before joining Axis Bank, he spent 13 years with Citi serving as Director for Corporate Banking and Trade Products. At Axis, he now leads strategic banking relationships across multinational corporations, fintechs, and high-growth new economy companies. An alumnus of XLRI Jamshedpur and IIT BHU, he has played pivotal role in structuring marquee tech, IPOs, and growth stage financing in India. Now inviting Aman Dalal, Business Head, CMS and Corporate Liability Group, Head of Transaction Banking, IDFC First Bank. Aman brings more than 2 decades of experience across India's leading private and foreign banks. He leads cash management services and transaction banking at IDFC First Bank, where he focuses on building intelligent data-backed payment and liquidity solutions for corporate and MSMEs. His expertise spans product design, CMS innovation, and scaling digital transaction ecosystem across India. Now inviting Ravi Valecha, Chief Executive Officer, India Factoring and Finance Solutions. Ravi leads one of India's fastest growing factoring and trade finance institutions, providing working capital and receivable financing solutions to SMEs, exporters, and mid-corporates. With deep expertise in cross-border financing, credit risk, and structured trade, he has been instrumental in expanding supply chain finance access to unserved segments across the country. Now inviting our next speaker, Vikas Varma, tech and fintech leader, a Fortune 500 technology executive with more than 30 years of experience. Vikas has held senior roles across payments, cybersecurity, fintech, SaaS, and consumer technology. At MasterCard, he has led some of India's biggest payment digitization and ecosystem building initiatives. Today, he advises early-stage fintechs across South Asia, helping founders scale through GTM strategy, partnerships, risk frameworks, and leadership development, widely regarded as a connector and innovation evangelist. He continues to play a pivotal role in shaping India's digital finance landscape. And now, inviting our moderator, Sumit Aggarwal. Can we have a huge round of applause? Mr. Sumit Aggarwal has total experience of 31 years in the banking sector and has managed businesses in Asia, Middle East, Africa, Europe, focusing on trade, supply chain finance, and cash management. He was associated as a business head with Jana Small Finance Bank in his recent stint. Prior to Jana, he has worked with Emirates National Bank of Dubai as a group head of transactional banking services. Before his stint in Emirates National Bank, he was associated with Standard Chartered Bank. Can we all have a huge round of applause for our moderator and our panelists? And now, Mr. Sumit Aggarwal, I hand over the stage to you.
Thank you. Good afternoon. Good afternoon, fellow panelists, and thank you very much, and thank you, audience. So without further ado, I think a lot of context has been set about the importance of agriculture, but just to lay the context in very few words, the agri-food sector globally is set to be almost a $16 trillion industry in 2027. And the important part is that India is the second largest producer. And even more important is that more than the GDP contribution, 60% of the population's livelihood is derived from agriculture. Now, while formal agricultural credit has been growing at a good pace, The reality is that leave alone the small and marginal farmers, which comprise about 86% of the cohort, they miss out a lot. But more importantly, about 60 to 70% of the value chain segment beyond cultivation, which is storage, processing, logistics, and market linkages, is also underfunded. So it's just not about numbers, it's about India's growth, the mission of Ayekart, etc. And therefore we have this panel. And the last point that I wanted to build as context, and then I'll start firing questions at my fellow panelists, is that as per some studies done by NABARD and Niti Aayog, about 18 to 20 lakh crores is the annual credit requirement. So it's almost a $240 billion industry just serving the Indian agri sector. So let me start first with Sanjiv yourself. Thank you once again for joining us. So Sanjiv represents Axis Bank as the introduction said. So, given that it's a vast economic engine, Sanjiv, what are the primary structural challenges that currently prevent financial institutions from deploying capital into this space at the scale you would typically commit to other industries or sectors if they were so huge? What's preventing it?
So typically as financial institutions, we like to see predictability. So in any sector we lend, whether it's an industrial sector or even if we come into the, let's say, the retail space, the individuals, etc. One cornerstone is income analysis, cash flow analysis, how predictable those cash flows are, and then you stress them out, and then you figure out that, okay, this is the core cash flow which most probably will be available for debt servicing, right? So that's the cornerstone of lending. But as you go down in the agri value chain, and let's say you start looking at individual farmers having, an average land holding in India is so small, right? So with a very small land holding, etc., then you start seeing a lot of surprises which can come in the farmer's business, okay? Mr. Mohanty in the previous panel was talking about the various interventions that the government does. And the government is also, I think they have some logic behind those interventions. Today in our consumption basket, food is one of the largest occupants in that consumption basket. And that's how, and therefore in the CPI, the inflation index that we have for consumers, food has one of the largest weightages. And this government has been very, very sensitive to, high levels of inflation. And the moment there's an agri commodity, price which starts going up, there are stock limits which come in, there are export bans which come in. And the biggest loser in all of these interventions is actually the farmer's business and therefore the farmer's cash flow. And apart from this, you will have natural calamities, right? There is crop insurance, but it's obviously not as effective. And then there's seasonality. Kharif, Rabi, many farmers do not operate in both the seasons, and therefore the cash flows that come through in their business is very lumpy. So all of this, I'm just presenting the differentiators from the larger sectors and urban individuals that we are very comfortable lending to. And then finally, of course, let's not forget the famous CIBIL score, that you don't have all of that, right? So that's the context in which we are operating when we are trying to lend to agri. But of course, there are things going. We ourselves have almost 100,000 crore lending book. We have priority sector obligations. Our total growth is actually constrained by the amount of PSL that we can put in. And if we are not effective in addressing this opportunity, we can't grow, right? So in spite of a lot of challenges that I spoke about, we are still here. We're still doing business. I think, and again, there are schemes like, there are guarantee schemes, and FPOs have come out as a concept, which are trying to, build some resilience in terms of aggregating farmers. And then once you start doing some amount of aggregation, you have diversification of risk, right? So all of that is coming through. I think there was a panel on supply chain. So the farmer is a small guy, and the cornerstone of supply chain is that there's an anchor somewhere. And can the anchor bring some kind of stability and predictability in these cash flows? So there are ways and means in which these challenges can be addressed. And then the other challenge and also the solution is the extremely low ticket size. So the borrower community over here is dispersed. India has a large land mass. So with the dispersion of the borrowers, low ticket size, and all the challenges that I mentioned, it becomes very challenging from a cost to income ratio, perspective to really make a sound business out of it. But again, you can address this by deploying technology at scale. So there are challenges, but there are solutions as well.
Thank you, Sanjiv. So we heard the view of a very large bank or banking sector. Let me switch over to another provider of finance. So I pivot to Ravi first. Ravi, from a factoring perspective and specialized factoring and receivable finance institutions like yourselves, how do you view agri and FMCG supply chain as a scalable asset class? Because since afternoon we started, we've been only talking about trillions and sometimes hundreds of billions. So is it that, the MSMEs, moving away from farmers for a minute, MSMEs need to do something to, become more attractive in terms of potential borrowing customers? Is it technology awareness? Like Sanjiv gave us a good segue into saying that I've outlined the challenges, but there are solutions around the corners. So what do factoring and receivable institutions like yourselves see?
Yeah, first of all, thank you so much for inviting me on this panel. Thank you, Ayekart. While we have, agri as a very big basket, big sector in the Indian financial services sector, which has been historically managed and possibly taken to the high levels by the banks because of the PSL requirement. And of course, NABARD by itself has been a huge driver on the agri sector. So that has been the legacy all throughout. Now, we also read about the MFIs and the various other, collaborators who provide these services to the agri. And we periodically read about the government, the various other, loan waivers and whatnot comes into the play. So that has been the challenging area. Typically, that has been the biggest driver for banks to put in place specialist teams in place to drive the agri business. It's not only from a PSL perspective, but also from an economy point of view also. Agri is the largest sector in India, whatever is said and done. Manufacturing is possibly next, and services is obviously one of the biggest as well. So agri forms a special, attractive market proposition. Unfortunately, in the Indian sectors, Indian economy, it has been the capabilities of the unorganized sector predominantly. And that's where possibly the financing aspect has been lagging in a very big manner. Now come to the factoring and supply chain finance perspective specifically, factoring, as per the Factoring Regulation Act, the factoring can be done only against the B2B buys and sales, so institutional sales only. So that leaves out the complete agri or the individual farmer or even the FPOs to that extent, because they are an association, not really a private sector or a partner association. So that leaves apart possibly large component of the sector outside the purview of the factoring. Having said so, even the organized sector, there is a huge element of risk. Factoring is suitable to the category of product which is sell it and forget it sort of a structure. Now, to give you a perspective, possibly all of you are having a bottle of water in front of you, so possibly this has been manufactured by one of the companies and sell it. You will not find many rejections in the buyer's category. Even this water is possibly an agri commodity or sort of, to that extent. But it is a staple sort of a thing which you will not find a lot of rejections unless, and of course, there is some, something, a batch has gone bad completely. Water is water, it is purified water, it goes to the, say for example, the retail shows. it won't get rejected to that extent, which we would see in a typically any other agri commodities or any other agri product. Apart from the possibly, the processing aspect of it. So say, for example, a tomato puree manufacturer going into Kisan or somebody manufacturing into the processed puree or ketchup segment. So these sectors become a very attractive position because they fit into that model of sell it and forget it sort of thing, where the rejection ratios will be much, much less and the predictability comes in. Because factoring is not really assessing the seller on the capability of their standalone financials, historical financials, as we call about, in the banking world, most of the financing is done on the basis of balance sheet strength. That doesn't come really into the play on factoring side, which is more important is the sales, the historical sales, how your product has been, how the buyer-seller credibility has been, how the performance of the sales ledger has been, what has been the dilution or rejections. Now, this has been the perennial problem in the Indian agri segment. Okay, we have seen sporadic rises earlier, but the rejections, for example, I'll not touch upon agri and seafood, I'll touch upon. We tried to do India is one of the largest seafood exporters from India. I'm sure you would have read about today's also the EU has accepted that US thing. But there's a huge element of rejections even on that front. For example, in one of the geographies, possibly US, if the goods are rejected, it requires, at the port of entry, it requires FDA approval. If the FDA approval is not there, in some countries, they destroy the product. They don't even let you take out the goods from their port and reship it to somewhere. So that's a loss, the risk which the exporter is taking in this segment. So huge risk. Now, obviously, for a financier to come in, obviously, that's again a double risk. So how do you mitigate against that? There are various other insurance products available to cover that sort of a risk, but that's a challenge which comes when you actually are assessing from a financing point of view. We have done some sporadic deals in nothing much, I'll be frank with you, nothing very high levels. Because of these reasons, we have not been able to scale up that model. It's a very attractive proposition. I have few deals possibly, which we have worked up, but that again comes into the processed agri products, not really on the agri commodities or any agri sector. But definitely the scope is there. If we are able to bring in some predictability, which the new age companies like Ayekart are bringing in, the agri-tech industry, as we call it now, are bringing into the play. We did work with some other agri-tech player also earlier. And these are the scalable model where some organized sectors are coming into play and securing all these risk elements which I have told. And if that works out well, then definitely sky's the limit. I hope I can answer that.
Thank you, Ravi. So, we have spent some time setting the context or the problem statement. So, being an ex-banker myself, I think I turned to a non-banker, Vikas, who has spent all his career illustrious in MasterCard. So we get into the solution aspect of the panel now. The next couple of discussions will be around solutions. So Vikas, help the banks, help the lenders, if you may. So the question is that if there is hypothetically a platform which can provide verifiable real-time visibility across the supply chain. I'm taking all the comments of Sanjiv and Ravi put together and my own experience as a banker who always wanted to do agri supply chain lending but couldn't do enough. So confirmed offtake contracts, you wish the world, right? But all objective. So how do you think granular information can change things in terms of underwriting a loan where perhaps the physical collateral, a lot of other uncertainty is still lurking around the corner? How do we leverage technology and especially data and AI, ML or whatever other fancy solutions you might have in mind? Go for it.
Yeah. Thanks, Sumit. And thanks to Ayekart for having me here. It's a pleasure to be here and meet Debarshi after a few years. In a prior life, Deb and I worked together in MasterCard setting up a government business vertical. And then he left to be an entrepreneur. I'm really proud of you, Deb, of what you've achieved. You've got miles to go, as the gentleman said, but I think you've made a brilliant start. To your specific question, we are now talking sort of product design. You have to also, bring in the concept of context to data. Today you have a collateral poor ecosystem of the agri ecosystem, but it's data rich. But entirely, all of this data is really discrete today. Imagine if you could actually stitch up data along with context to sort of provide a lender with what I might call an integrated battle picture, which on a dynamic basis allows them to be able to assess and reassess their odds of risk of failure, of recoverability, then I think you have a proposition. Let me sort of digress a little bit and talk about context a bit from the payments world. Card payments also faces card fraud, as you all know. And I think the last data point I saw was about 7 basis points of total value is lost to card fraud. It's something like $30 billion a year, not small. And if you split that between domestic fraud and let's say cross-border fraud is probably 2-3 times higher as a percentage. Therefore probably 18 basis points or something like that. And this is despite having very low comparative approval rates on approving a cross-border transaction. And some of us might have seen it when we are overseas. There's a tendency to have a transaction decline more often than on the domestic space. Let's say 50-60% transactions are approved, 40 are declined. Despite that, you're talking such large numbers. So some of the challenges we faced as a network was really about how to determine which transaction should be approved, which should be declined. And those are customers like banks, asking us for those solutions. Today, you have analog solutions which actually look at a single transaction, look at time, place, who's doing it, what type of, time of day, merchant category, location, geography, and you approve or deny. Because you have to do that in like 120, 140 milliseconds, no time. Think about the first transaction that happened, the second that happened, the third that happens, and this system is approving or generally approving these transactions. Here's the fourth transaction that happens. The third was in London. It was an ATM withdrawal at, let's say, 12 in the afternoon at ABC ATM. The fourth transaction was in Tokyo at 1 o'clock. It got approved because it was seen as a discrete transaction and you ticked all the boxes because you got all the data elements there in your data string which said yes, cardholder, PIN approval, available, PIN block, EMV, we get about 500 data elements in the entire transaction. It got approved, but actually it was fraudulent. And the bank then lost $40 million over the next, I think 5 or 6 hours because it could not really determine whether the transaction was actually genuine or not. We then used AI to actually build a very large-scale engine to create context. And the context was, can you stitch together a transaction history of this particular cardholder? He was in London at noon. How could he have been in Tokyo at 1? Now, if the entire platform can start to see, do a look back and say, hang on, doesn't seem right from a geolocation standpoint, either have a challenging question asked or give a call back or do a referral, you would have created a decline and therefore prevented fraud. So this actual platform is now being sort of put out there in the marketplace across many geographies. And I come back therefore to the fact that if you have discrete data points, then you're up against a big challenge of static collateral, and you'll never be able to rival that. But if you can reliably stitch together the entire ecosystem from, let's say, land records to sowing time to crop growth progress to warehousing of stocks and maybe any forward contracts that you have for sale, and you can see create a digital picture or digital twin of what's really happening in the ecosystem, present it in a way that a lender can consume with scores and with probability for each of these and dynamically changing some of those aspects. Because if you suddenly find that there is a kind of a stress in the ecosystem, it hasn't rained, the crop is drying out, you can actually start to modify those scores. So to your point, therefore, product design can actually be very successful for creating a platform that can deliver a very credible, non-static collateral, which really future cash flow based picture framework to lenders.
Thank you, Vikas. I think it's time to turn back to the lenders. So, Aman, everyone champions data these days. It's fashionable to say data is the new oil. I think Vikas has added a dimension to it, that there's data and then there's data. What I mean is data intelligence. So again, as a regulated institution who has lots of responsibility, fiduciary and otherwise, what do you see are the practical hurdles that prevent you from fully trusting and acting on data as readily as you do on traditional audited documents, like Sanjiv reminded me? And is it a challenge with data standardization, integration, or perhaps just about navigating some regulatory comfort? How do you see it?
I think first of all, thank you very much for having me here. And I think as you rightly said, data is the oil which is known to all of us. But let me start by saying this, that I think about 1 week back, one of our RBI deputy governor had used this line that data is also like a water. And if you use it properly, it can save lives and it can sustain lives. But if it gets contaminated, it can actually ruin a lot of stuff, right? So I think that's where the context of that how important the data is in this context specifically, because we are talking about a segment who is not that digital savvy, right? And in that scenario, as a lender, we are dependent upon various external parties to receive the data for us to evaluate and see that whether that data is right in the effect with which we will be able to take the right decisions, right? So there are, I think, 4 or 5 things which comes to my mind specifically on this is that one, from a risk point of view, there is the malfunction which can happen right at the source of the data. Now that can be of 2 kinds. One, that is an intentional one where, I am compromising my identity with somebody else, and that's how the source level data itself is changing. But as a lender, when I receive it, I don't have any way and a means to verify this. That's one way, which is where probably, the huge risk which comes into picture. The second point related to this is also there is an identity theft or synthetic identity models which are available in the bank, in the country, right? So that creates another important element for us as a lender to identify that is the data which is coming to us, is it rightful enough or not, right? That's point number 1. Point number 2 is also related to, while we talk about digitization and practically, I mean, if you don't look at the rural side of it, but moment you go up the chain, we all talk about APIs of, in practically in everything, right? In APIs world, and we have seen it ourselves, that there are malware functions which happens because of that reason. While it's not an intentional one, but there are cyber threats which comes into picture because of that reason. The movement of data when it is traveling from point A to point B, there is a malfunction which happens, and because of that reason, there is incorrect information which gets triggered, and because of that, incorrect decision happens, and because of that, there's an incorrect lending happens, and because of that, there is an incorrect kind of loss which gets incurred, right? So that's another very critical aspect of the security angle which comes into picture, which needs to be kept in mind. I think third, very critical, and this is at IDFC, we also face quite a bit because we thrive to be a digital first bank. And when we talk about digital first, there is plethora of data which is available inside the bank. Now, what do I do with the data such that it makes continuous sense for not only for the teams which are working it today, but also for the teams which are going to come at a later stage, right? And hence it becomes very, very crucial for us is that the data modelings which we have done, the way the systems are talking to each other, is there a very clear documentations which are available to keep reminding people that for what reasons such data was configured and for what purposes, right? Second is when there are change of hands happens, right? There is a knowledge transfer becomes a very key element, because if these 2 things are not there, what really happens is that we as humans will become much and more, more and more dependent upon how the systems are throwing the data without really understanding that what has happened at the background in terms of various data logics which have created. And then the typical response which will come into picture that, this is a system generated outcome, a scorecard which has come into picture, and that's how we have done the lending, to the point which Vikas was talking about earlier, right? So I think those 3 or 4 key elements which creates an issue for us as a lender to verify that, whether the data is really helping us in that form and shape. While on one side, yes, we can't move on the traditional methodologies because yes, it has a lot of cost associated with it. It will not give us a speed. It will not give us the agility to do a lot of stuff the way we want to do this. And I think hence it becomes really important is that with all of these issues which are there, can we build layers which can protect us? And I'll give you a very simple example of this is, let's say if we want to really identify that person A who needs a 10,000 rupee lending from a farmer, for us to know that whether it is person A to whom we are giving the lending, I think the first thing which we go and do is that basis his Aadhaar number, we'll go and figure out from UIDI that whether the person is actually ABC, which is we are talking about. That's one container of information through which we pull out the information. Second is certainly we will need a PAN card, right? Because, and then we'll go to NSDL and go and verify that yes, this is actually the same gentleman who is asking for this. Third, that's the second container which comes into picture. Third container comes is NPCI, where we'll do a penny drop transaction just to see that the person is really the same. So if you create, so there are 3 different containers through which you are identifying the identity of that person to whom you are lending, right? So that's where layers like this probably can help us. But certainly we can't move to your question in terms of to the back traditional ways of doing it. We have to keep in mind the associated risk with which the data and APIs comes into picture. But I think with required layers and controls in place, that's a calculated risk which each lender takes it, and that's how we need to work together on this.
Thanks, Aman. Well spoken. And just for the audience, the stitching, the containers, the layers, basically we have a couple of more minutes, so let me throw it back at Sanjiv. Sanjiv, if I may. How transformative would end-to-end visibility, verified sourcing, delivery confirmation, digital contract, fraud reduction, again, it's a wish list I'm reading out. Does consolidating this information provide the robust auditable basis needed for scaled lending that we are looking for, given that the size of the opportunity is roughly $250 billion, give or take, and more importantly, 60% of the population being impacted? So as one of the largest lenders, what's your take? We have a couple of minutes at least more. And Ravi, please feel free if Sanjeev's answer is very short and brief.
No, Sumit, so
thank you.
No, thanks, Sumit. So, as I was mentioning in my earlier remarks, an opportunity of this scale and where the average ticket size is one of the lowest in the lending spectrum cannot be addressed unless we use technology. And one of the cornerstones of using technology is using data. I think today technology is really advanced to a very large extent. It's incumbent upon us as lenders to use them. I think Vikas's point around context was very valid, right? So you can drown in data, but if you are not able to see patterns and see context and make sense out of it, then it doesn't. It's kind of useless. But some of the points that again, the challenges that I was talking about. For example, I was talking about land records. But if you are able to use some of our states in southern India, they've done a tremendous job in terms of digitizing land records. And if we are able to use, the blockchain technology or any other, whatever form in which they have used, to make lenders comfortable that yes, this is credible security. This actually exists, and through geotagging, the location, and all of that, right? So that's the whole security part. The other bit is about predicting cash flows, and one way to predict cash flows is to actually go back into history. So for example, if I talk about, let's say, a dairy farmer, and this dairy farmer is we want to understand that in the last 12 to 24 months, what quantity of milk has he been able to sell on a regular basis? I think the technical lingo there is pouring, right? So how much pouring has the farmer really done? And can we get that data from the dairy, and we then look back saying that, okay, historically, this is the kind of pouring he has done, and hence, this is what I can lend, So I think there's a lot that we can do on that front. Then again, some kind of predictive analysis, the input costs which get in, right? Seeds, pesticides, and all of that. What is going to be the market price when the harvesting happens? Again, this is all data-driven algorithms one can use. So clearly, this problem cannot get solved unless we use data and technology. And today we have the tools. And we of course have AI also, which can help us do forecasting much better and really make a foolproof business over here.
Thank you, Sanjiv. So in the spirit of Ayekart and how we should do things, we've delved a lot on the problem statement. So unless you leave depressed for the tea break, let me just close out by saying that formal credit in India for the agricultural sector, has now touched 16 lakh crores, which is 190 billion US dollars. So if we put our heads together like this, all veteran bankers, and being committed, this number can only grow up. And we just wanted to give a fair context of the problem and the pragmatic ideas and brainstorming around the solution. So once again, thank you very much for your time and your ideas. Thank you.
Thank you so much, and I would request our moderator and our panelists to stay back on the dais. Thank you so much for those insightful contributions. And to felicitate our speakers and our moderator, I would like to invite Mr. Debarshi Datta onto the stage to felicitate. Can we have a huge round of applause, everyone out here? Requesting dignitaries to join in for a group photograph. Thank you so much, each one of you, for joining us onto the stage. Mr. Debarshi Datta, our speakers, and our moderator for being with us for this fantastic discussion.